With house prices going crazy, inflation at over 5%, Section 24 and everybody hating on landlords right now, is it time to get out of property or is it the time to get in? There's no doubt about it, property is really hard right now and it's got harder and harder as we're going through. It does feel like everyone's working against us from time to time. Poor us, eh? But look, there are some benefits, but let me break down exactly what's been happening over time and why it's having such a negative impact to see if it's actually worthwhile if you're at the beginning of your journey. First of all, in 2016, we had a change in stamp duty that meant if you're buying a second home or an investment property, you're going to pay a 3% surcharge on that. So normally where you'd get your normal stamp duty bans, as an investor, the government went, you know what, because you're buying it as an investment, you need to pay an additional 3% in tax. Cheers, government. Then we moved to 2017 where we had the new Section 24 rules where essentially if you owned a property in your personal name, which everyone did for tax purposes because of two reasons, you had wear and tear allowance at 10% and you had your interest rate as a legitimate cost, the government decided actually wear and tear, that can go out the window. And by the way, we're no longer going to count the interest of your mortgage as a legitimate expense. They phased this in, so now if you're a higher rate taxpayer, you will get a higher rate of tax. I know people that were retired on 40, 50, 60 grand a year that are suddenly earning 30 grand a year post-tax. It has a huge impact. 2018, the UK and the EU finally struck a deal with the Brexit referendum, which then got rejected by a lot of other people, but this really triggered the downfall and the weakening of the pound, which had another negative impact on the UK property market for local investors. 2019, the government decided we haven't been kicked enough. So then what they did is the tenant fee ban. So essentially, if you were a tenant before this, you could go and rent a property and you had to pay £400, £450 as a tenant fee. This went to the letting agent, not the owner of the property. And you might be thinking, well, how does that even impact you? Actually, the government are pretty stupid with this one, if I'm completely honest. It hurts everyone. You think that's going to benefit the tenant, but it doesn't. It benefits them in the short term. Then what happens? Well, letting agencies wipe 20% of their income off their books almost overnight. How do they end up making more money? Well, you've got all of the other things, so putting their margins up when there's a refurb, the EICRs, putting their margin on that. And then, of course, oh, by the way, landlord, we're now going to have to charge you more. And you think, oh, poor landlords. Well, what does a landlord do? Well, they need to make their margins. So what happens? Rental increases. And then the tenants go, oh my God, look at all of these rental increases we're getting. Yes, it's a circular thing, a cyclical nature in property investment. When you hurt one person, it comes back around to benefit somebody. When you benefit one person, it comes back to hurt them in the end. Huge negative impact for everybody involved. Then, of course, 2020, we had the COVID tenant ban, and this really came into play where the government might as well have just said to the tenants, hey, just stop paying. We can't kick you out anyway. We actually had it communicated so badly that, by the way, you can just have a mortgage break. We actually had tenants genuinely calling us and going, hey, just heard about the mortgage break. Does this mean we don't have to pay rent anymore? It's like, yes, obviously you do, and we're not going to get a mortgage break because that's going to hurt us as landlords down the long run. And then the government, oh, by the way, because of everything that's going on, I'm not actually saying this is a bad thing, by the way, I think they do need to protect people, but you then cannot kick people out during this period. So what did that do? A load of tenants not paying. Some, fortunately, continued to pay. 2021 of April in 2021, EICR certificates become mandatory for newly rented properties. So anything that looked absolutely fine, you now need to get an EICR straight away and do any works on electrics, increasing our costs, which again will likely increase rents even further. Oh, and if that wasn't enough, in a good few years' time, the energy performance rating is going from an E minimum all the way up to a C minimum, increasing the cost to us investors. So you might be asking, Jamie, Why on earth are you investing in property still then? Because I am a damaged, hurt individual, a sadistic mofo that just needs more pain in his life. And there happens to be some other benefits too. First off, it is the single best preservation of capital that's available to us. Investing, yes, it's of course about making money. It's also about the preservation of the money in the first place. With inflation so high, it's 5.1%, I think it was announced. And that's going to have a dramatic impact to all of us. But that inflation happens to the property assets as well. So for example, in theory, the £100,000 property will go up at least £5,100 in theory. So even if you've got it in cash, your cash is preserved because £1 today is worth less than £1 tomorrow. Next is strong market fundamentals. No matter what happens in the market, through the trends, everybody seems to want a house over their head, or a roof over their head rather than a house. A roof over their head, a warm house to sleep in, and that's what we're providing. So because of the strong fundamentals, it is a need rather than what I want. And that means everybody will need a house moving forward no matter the trends. The other thing that we've got in the UK is we're quite a small island. We have like 94% of our land not built on. And so 6% is really the concentration of properties within the 1,000 cities and 4,000 villages that we have available to hold all of our human stock in the UK. Massively strong fundamentals that I really like to buy into. Next is leverage. This is the most insane thing that I think is available to us. When you've got a £100,000 house, you haven't put in £100,000 most of the time. You've been able to leverage, the magic word in property. Usually 75% of that property, £75,000, a bank has lent to you on an interest basis, which means all you need to put in is 25% plus some purchasing costs and maybe a refurb. Let's say 40 grand for every £100,000 property. This is huge when you mix it in with the market fundamentals. Let's say, for example, we'll keep the numbers easy. You just put in the deposit, there's no other cost. Just to keep the numbers simple. And let's say the property value goes up 5%. £5,000. Well, you think, right, I've made 5% extra on my money. No, you've made 20%. Now you might be going, well, hold on, how did you get that? Think about it. A £100,000 asset goes up 5%. That's £5,000. But you've put in £25,000, so 5,000 on top of 25,000 is a 20% increase on your money. That's on top of the cash flow. It's just a massive, not really well thought out benefit of investing in the property or real estate asset class. The next reason is I like to be a contrarian investor, and what that means is a lot of the time I'm going against the grain. When everyone's buying, I'm looking to sell, and when everyone's selling, I'm looking to buy. And a lot of people are really nervous about the market right now. It's getting harder and harder. We've had restrictions and reductions in landlords over the past couple of years, and I'm looking to take advantage of that because my personality means that if I can make it in this market, which is really tough by all accounts, what happens when it gets easier? And it will, in my opinion. Then I'm just going to make more and more and more. But I'd rather be bred through the hard times to take advantage of the easy times moving forward. According to Hamptons, during 2017 and 2020, the housing market increased by 675,000 units. However, during the same time period, there was 250,000 less privately owned properties for a rental basis, private landlords basically. This means that 250,000 people over that period net, because obviously more people bought and people sold, but there was 250,000 loss in rental properties. Now you might think, oh my God, well that's a lot of the old timer landlords, which is going to happen more and more over the next few years in my opinion, and that makes space for us new age landlords coming in. Why does that excite me? Well, again, basic economics. If you just think logically, in the next 5 years, do you think there will be more people looking to rent or less people? Put in the comments right now. If you put more, I'd say that was a pretty safe bet. If there's 250,000 less properties available, but more people want them, then there is more demand and less supply. What do you think that does for rents? they go up. What do you think that does for profits? It also goes up. It doesn't take a genius to figure this out. It's basic economics. Finally, I like them gains. I love capital gains, and in property, historically, it's doubled every 10 years since 1086, the Doomsday Book. Does that mean every 10 years? Absolutely not. But in general, property prices are going one way. It's almost as certain as death and taxes. So I'm all about that. Talking about taxes and all of these changes with Section 24, should you buy it in a company name, a personal name, whatever, I just don't care. I think it's such a ridiculous thing to be thinking that much about. I think it's smart when you're in the game to think about the most tax efficient way of doing it. But am I going to stop myself buying stocks and shares because I might get taxed on them? No. Am I going to stop investing in cryptocurrencies because of tax? No. Am I going to stop investing in property because of tax? No. There are always loopholes. The tax regime, the tax system shifts and changes all the time. And remember, theoretically at least, you are taxed on profits most of the time. So I'm okay working within the boundaries that I can play the game in. If the fences change and the game changes, then I'll be a different player. But I'm still going to be playing the game, just adapting the rules over time. And I think you should be too. Look, if you don't want to invest, then keep the money under your mattress. Genuinely, go and do that. I personally think that would be a massive mistake. And for the rest of you that are watching this, don't wait to buy property. Buy property and wait. By the way, if you've got 100K or more and you want me and my team to help you build and scale a portfolio, then put APG in the comments below, and we'll also put a link in the description. And one of my senior investment consultants, Toyin, will give you a call and talk through the options. If you're new to the channel and you want to find out more about property investment, then show me some love and subscribe to the channel, hit the notification bell, and you'll get some more information coming through 3 times a week. And if you got value from this video, make sure to hit the like button and watch the next video.